Let's run through a brief demonstration of analytical procedures. These are similar to the procedures that an auditor might follow at the beginning stages of an audit, when they're just trying to get a handle of the different risk areas where they should place their focus. One way to identify risks is to identify areas that are different from your expectations. At the beginning of the year, this might be revenue that was much higher or much lower than what you expected based on prior year performance and based on the economic condition. This might be metrics that you would expect to be similar to the competition within the same industry, but are much higher or much lower. They might also be items that you would expect to see given the nature of the industry, but don't see. We use these tools to focus our areas of testing. I'm going to look at Ford Motor Company, and I'm going to compare it to Tesla and General Motors. Now, there it goes. Now, if you were the auditor for Ford Motor Company, and especially if you were a returning auditor, you'd have access to, for sure, their end-of-year preliminary financial statements, their prior year financial statements, their notes, as well as your own working papers from the prior year, if applicable. At this point in the audit, you've probably also made some preliminary inquiries over where the risk areas are, what you should expect to see, what you shouldn't expect to see. What you don't have access to at this phase in the audit is the competitors' reports. So you can make this comparison to industry. You can obtain these from the Securities and Exchange Commission's website. This was created so that publicly traded corporations could be more transparent and could be held accountable by those who buy stock. We can click on the link that says Company Filings and then search for a specific company, financial reporting, and required quarterly and special reports. So let's look at Tesla, which is one of the SEC filers, and it's motor company in the same industry group as Ford. What it will return is a listing of all SEC registrants who use the word Tesla in their registrant name. The one we want is this one, Tesla Incorporated, that operates in the standard industry classification group for motor vehicles and passenger car bodies. And we can click on this link here for the SIC, and it'll take us to a listing of all companies who file with the Securities and Exchange Commission, and self-identified as being a part of this industry group. If you scroll through this list, you'll see a school bus manufacturer, courtesy reports provided by foreign corporations that operate within the United States, as well as component manufacturers. So let's look at Tesla's reporting. When you click on that link by SEC registration number, it'll take you to a listing of all of their required filings with the SEC. The first couple reports here are 8K reports, which are used anytime a registrant has to report something outside of the ordinary. These might be a change in audit firm preparing their financial statements. It might be a disclosure of a major divestiture. It might be a hiring of a new corporate officer. Things like that don't happen all the time, but are interesting to shareholders and people who make trading recommendations based on this information. We're interested in the 10K report, which is the report that publicly traded corporations file with the Securities and Exchange Commission at the time of their annual meeting. It contains their annual financial statements. If we click on the link that says Documents, that'll take us to web-readable versions of the reports. And let's take a look at this top one here, which is the full documents. This contains in a report format all of the information required to be reported by the SEC. You can click on these links to refer to specific sections. You might refer to the risk factors to see what risks the competitors are up against. And you might use the search function down here to identify a specific policy to see if your own policies for the company you're auditing are in line with what the competition is doing. Depending on what kind of information you're collecting, this report might be easier to read than this interactive data file, which presents in a table format all of the different disclosures required by the SEC. Now, if you're using an analytical tool like Microsoft's Power BI or Tableau, you can use what you saw on the previous page, which was the XBRL reports, to create a manipulable table setting that you can link and then analyze. We're going to be going old school by looking at Excel. If you click on this link here, View Excel Document, you can download an Excel file with each of these tabs. Now, here's what Ford Motor Company's Excel file looks like. And to give you an idea of what's contained in this file, the first page of the Excel report is a summary page that tells you what report you're looking at, where the entity is incorporated, where the entity does business, and other attributes that are needed for decision makers. To give you an idea of how voluminous this report is, you can click on Move or Copy here. It'll give you a listing of all the tabs in this report, one tab for each of the major files that are embedded within the report, and scroll down and see how in-depth this report really is. I believe there are 160 tabs in this file. We're going to be focusing primarily on these major financial reports. The remainder of the report are the notes and the special disclosures. So, I created a table pulling information from Ford's financial statements, that Excel file that we just looked at. I pulled major category items from the reports, including the income statement, including the statement of cash flows, and the balance sheet. I also included two non-financial measures, the number of shares and the number of employees. Both of these are used as indicators of profitability and productivity. So we might think about what metrics we would use to tell our story. If we're looking at national and global economic factors, we would select metrics that indicate how the performance improved or declined based on our expectations. If we're comparing customary practices in our client industry, we might look at the different financial ratios, the liquidity ratios, the leverage ratios, the profitability, and the efficiency ratios. If we're trying to get a good grasp on the nature of business, we would look at the inventory productivity in a productive industry or a retail industry. And in all industry, we take a look at the productivity of assets. And then for any areas where we identified qualitative risks based in our risk assessment, we would include measures or drill down to the detail related to those measures. For example, if you know that your client had to write down a significant quantity of inventory because of, I don't know, say a recall on a Ford motor vehicle, you would want to look specifically at the inventory areas and the write-off transactions. But let's start with some basic comparisons. So let's look at our year-over-year change and our year-over-year percent change, just to see where our activity lies. And you can do this with simple formulas, really. So you can look at formulas to see where the major areas of change were. We can tell that 2019 looked to be a contractionary year for Ford because its total revenue decreased year over year. Its net income decreased a lot year over year. That's definitely something we'd want to look at. The number of shares stayed the same. And we could even use in this column here some conditional formatting to oh, there we go. Anyway, you can use conditional formatting to color code the cells based on a rule that you establish. And let me show you what that might look like. So here's some metrics that I prepared earlier, same as you would see on the other spreadsheet. I included some conditional formatting. I added a field here so we could see quickly where the decreases were year over year and where the increases were year over year. I also used this tab here to color code it, so it was even more visually obvious where the increases were, where the decreases were. So we saw that there was a almost 3% decrease in net or total revenue. There was a 97% decrease in net income, which means there's a major change here that happens that we weren't expecting. It looks like we had a tax impact that changed in 2019. So we can look at relationships amongst the different metrics. Because revenue decreased, we would also expect cost of sales to decrease. We would also expect finance receivables to decrease. And we'd also expect net income to decrease. So for all of those different relationships, they held true. And those are relationships that are logical because of the reporting relationship. Now, where something not there that would logically be there based on the financial statement reporting process, that would be a risk area that we would want to include substantive audit testing to evaluate in more detail. So now let's go back to our spreadsheet and look at some of the financial metrics I chose to include. A lot of these are common metrics that financial analysts use to evaluate the health of the company. For example, the debt to equity ratio, line 30, will show you what percentage of the company's financing sources comes from debt and what percentage of the company's financing sources come from owner's equity. And we know that the automotive industry is heavily reliant on debt. So if we compute that ratio here, we can see that, in fact, the ratio of long-term liabilities to owner's equity is 3.82, which means that there's almost 4 times as much debt financing the company's operations as there is equity, which is indicative of risk, but it also could be standard in the industry. Another common ratio is the current ratio, which is calculated as current assets divided by current liabilities. This is an indication of your ability as a corporation to meet your immediate financial needs. Ideally, It's good for this to be at least 1-to-1 because that means you have enough assets that can be turned into cash quickly to settle the liabilities that could be due quickly. But again, we'd also want to compare that to the industry to see what's normal and what's abnormal. And here, I'll post the spreadsheet to the Moodle as well. So I also computed the year-over-year metrics for Ford Motor Company. I included the decrease and increase indicator here. And it's interesting that the net sales over the number of employees increased year over year, which is interesting because we saw that net sales decreased year over year. This would indicate that the number of employees also decreased year over year. They're doing more with less, or doing the same with less. Another interesting metric here is let's move on. So for each of the attributes that I collected from the Ford Motor Company, here's this column here, I also collected them for General Motors and for Tesla. You can see that Tesla is on an entirely different scale here. So if you were simply to compare, well, what's normal sales for the automotive industry, this isn't a good indicator. You compute financial ratios because they allow you to compare them on their own scale. Let's take a look here. It's curious to see that Tesla is a new company, and if you've been following the news, they're hitting some struggles right now as their demand has really exceeded their growth capacity. So while Ford had a bad year in 2019, Tesla had an even worse year, which means any of the ratios that use their net income for Tesla are going to be negative. Now let's look at Ford compared to General Motors, column C versus column D. If we were to look at the net income to owner's equity, we can see that GM is right now doing a much better job than Ford at managing their income processes. We can also see that Ford is doing a little bit better than GM is at managing its current liabilities, but it's within the same ballpark as Tesla, which would be a good indicator that things are probably close to what they seem. And here's this. We looked at this one on the prior page. We see that Ford has debt almost 4 times greater than equity. GM has debt almost more than twice its equity, and Tesla has debt almost twice its equity, all of which indicates that companies in the automotive industry are heavily reliant on debt, but at the same time, Ford is higher than either of them. And then if we were to look at the ratio of total liabilities to total assets, we can see that, well, Tesla has the highest proportion of long-term debt relative to assets. The other two seem to be a little bit healthier there. GM and Ford are doing similarly with regard to net sales divided by total number of employees. Tesla has fewer employees and lower net sales, so theirs is a little bit lower. So this is a quick demonstration of how you might evaluate the financial performance relative to your competitors and relative to your prior year activities. Use this to help plan your risks. If you have any questions, I'll post the spreadsheet to Moodle so you can play on your own. And I'm always available by email or by instant messenger on the Moodle.